Now here's the thing. I don't know much about Russia or Ukraine, but I do know that a conflict of this nature is going to have an interesting impact on the crypto asset class. We have not seen this type of economic event against crypto before. Not to mention we haven't seen a recession before. And if we look over at what the rate hikes might be happening here in the March, happening by the Federal Reserve, that compounding over the rest of the year with these turmoils continuing to escalate if they continue to go in Russia and Ukraine, who knows what kind of perfect storm we could be creating for the asset class to lead into a crash or a recession, which a lot of bears have been calling for. Now, I'm not saying that it's going to happen, nor do I necessarily believe that's what's going to happen, but I do think we are set ahead for a time of uncertainty in this asset class. And really, I think the best bet would probably be to step back and take a look at what we can to better understand what's coming ahead and how we can deal with it. Now, before we jump in, I like to always ask my viewers, if you have any different of opinion, or you think that I'm missing something, or you want to bring up a really good point, leave it down in the comments. I love interacting with the community, and I think it's one of the best ways we can all learn from each other. Before I get to how I'm actually going to manage this time and deal with my crypto assets in the near future, let's talk about what's actually happening and see if we can actually gain any history experience and lessons from the past that we can apply to now, so we can gauge what we're actually trying to do. Let's start over in the Ukraine with Russia invading. Now, this brings up a lot of information because we really, again, haven't seen crypto assets dealing with a major conflict or a world war to begin. Now, I'm not saying a world war, but who knows? We have seen escalations like this go downhill before. That said, one of the first things I did was actually head over to Google and start to see what has been the effect of war on asset classes before, probably the stock exchange really being one of the major ones that there's a lot of history and data points on, obviously, right? There's a lot of similarities there, the TA, the charts, so it's something we can kind of make a comparison to. And it actually seems that it's kind of counterintuitive how it reacts. It actually seems to not be as big a deal as one might imagine. When you look at how war has affected the stock markets in the past, it actually hasn't been as drastic as you would think. Again, there has been some form of a drop on the news, but it's usually short-lived, and the recovery time, as you can see, is actually not that crazy in most cases. And the few outliers here, I would say, that have a more drastic impact on the asset class based on a news of war have been based on surprises. And this is something that I noted across many articles that when I was searching for this, was that it seems to be that surprise is when the market gets spooked. It doesn't like the surprising nature of things. That said, the old adage of it's already priced in probably rings true here and is a proof in the pudding right here. Generally, if the market sees something coming ahead, they de-escalate their risk. They risk off at a pace that they want to do so that they get to the position they actually think it is. And then we land somewhere a little more fair value, have a little dip, and we come out the other side. So I would really say keeping in mind that it's already priced in is probably the case in this sort of situation. We can actually see that when we look over at the charts, and you can see how Bitcoin has actually dropped very drastically, but over about a 12 to 24 hour period, it recovered entirely and actually made it back to the other side. It's almost as if this dip is for the people who aren't paying attention, and the rest of the buyers who are out there who know what they're doing, maybe institutional, are buying all that retail money that just left the market, because honestly, this is a very weird speed of events to happen. Again, it seems as though it's almost already priced in. Furthermore, I would note that as time is going on with more asset classes, technology advancing, our understanding of how these all are being manipulated and how they actually work, the economic effects that are happening on all asset classes really isn't having the same sort of effect it used to in the earlier stages of development of finance, period, right? We're talking about many wars at this point, many recessions, many different effects across all commodities, money, gold, real estate, having a diminished effect just because we already know it's going to happen. We know most of this stuff is transient. It's all part of cycles that come and go. And anyone who's savvy, or at least paying attention to what they're investing into, is probably aware of the nature of this. It's really the FOMO and the FUD of retail investors that are the ones who cause major spikes there when it's really not warranted. Again, pricing in the action, the information is already there for most retail people and people who are paying attention. You're preparing for major events if they're going to happen. And if you get surprised is really when you start to fearfully pull out of a market, sell off some assets because you don't want to be left holding the bottom of a bag or catching that falling knife in any way, shape, or form. So all this said, I really don't think it is that dire if it were to be perhaps just one event such as the economic turmoil in the Ukraine. But at the same time, talking about the compounding effect, we are looking over here at the US economy with the Federal Reserve looking to raise rates. Now, raising rates on its own also isn't necessarily an issue, and I do not think that raising the rates here in March will be the one tick box that's going to all of a sudden make the market crash or dive the US economy into recession. But what I will say is that those two can potentially compound. And the compounding effect can actually happen specifically from the turmoil because turmoil, conflict, world wars actually have an effect on commodity prices, which in turn result in higher inflation. Now, with the US economy having a massive inflation, record high inflation actually, this would necessarily be a good thing because continued inflation would be the exact opposite of the rate hikes are being used to actually combat. So would that mean that the Fed would have to continue raising the rates even higher, going back to 70s and 1980s levels, where we had a really horrible time with inflation and the rates went out of this world? All leveraging was pretty much put on hold because you were borrowing money at 20-30% on the low end, not to mention your credit cards would be in a ungodly knows where place. And the commodity issue is actually a real thing because Russia actually is one of the major suppliers of wheat and oil in this world. So they have a really big play on those two parts of the market. Of course, that obviously trickles down to every other part of it, especially when investors or even retail investors, they get a little bit spooked about that specific issue, or they see it just as an opportunity to raise rates because all the competitors are going up. You know, one gas station starts raising its rates, the other one over there does as well. And as we can see, we've already seen gas prices start to go up. I think we're gonna start to feel some supply chain issues compounded with the commodity prices rising up, and then realistically, inflation is going to go up. Now, this is actually kind of a whole tangent on it, but the first news I heard when the invasion actually happened and I saw the first shots of missiles hitting a building, which is kind of surreal. Let's stop and think about that for a second. That's like a nuts thing to see because now we have so much footage of stuff. Actually seeing war in that way, for me, was a very real wake-up call, to be honest. But my point here is more so about the concept of let's go a little bit conspiracy theory, a concept that I feel like this is almost the timing is almost too perfect. It almost seems planned. Now, if we're looking at rate hikes and we're looking at massive inflation, we're looking at real turmoil in the US economy, which obviously has an impact across the entire world. And all of a sudden, a major conflict over here happens kind of out of nowhere. I mean, I know Russia, Ukraine, there's always been some issues going on over there. And I'm sure someone in the comments is gonna tell me that, hey, this has been escalating for months now and see here. But really, it wasn't even on the radar, I think, of most people. It just kind of happened, right? So it almost seems as though there's like an effect that they're looking to accomplish, the world powers. And I know I'm going, again, conspiracy theory warning. I got to put like some disclaimer down here because I'm not even sure which way it would go. I'm just putting it out there. It's like, I'm not sure if it's someone like Russia who's actually playing into it, trying to, while the US economy is kind of low, trying to bring it down a little bit further and really push them down much further. Potentially because they've got a little bit more of a positive outlook on Bitcoin, maybe looking to cause the market to crash a little bit there, scoop up some Bitcoin, or, here, even one of the sanctions against them is using against the SWIFT bank accounts. Really, if you look at it, the articles are already out there that they could just bypass the SWIFT by using crypto. That would be a perfect solution to their problem right off the bat. And if a government starts to realize that, or already has realized that, then the major implications or the major combative effects that the other world powers have on another world doing whatever it wants, like fighting anybody, is sanctions. And if those sanctions can kind of easily be circumnavigated because of something like crypto, it could be a major player in the potential next world war or whatever we see as further turmoils going down the road. So that's Russia's side. Or we could even potentially be looking at the US using it because, as I had said, world wars, and we know the military-industrial complex actually has a benefit for a lot of companies, and the US economy has profited before in the past from going through a war, coming out the other side, generally winners or somewhere near the top, and the economy has come out the other side. As again, I showed you some metrics about how it has dealt with war. I feel like it's been a part of its sort of history and being able to come out the other side in a positive light for the economy. So I know I'm spitballing a couple of crazy things here right now, but let me know actually down in the comments if you think there's any validity to this. It was just something that struck me as I was watching the TV, again, watching on Missile Hill, the building. I was like, the timing's just too good. It's just too good to be true. But anyway, I digress. Really, the main point to be talking about here is the point of uncertainty. We are coming into a period of uncertainty. I think we're dealing with macroeconomic events that have not happened to crypto before, or it hasn't lived through. It's just not as mature as some of our other babies out there. And we need to take that for what it is. Now, there's a couple of ways we can really deal with this. Now, you can embrace the volatility, and there's many people out there day trading, or the fact that crypto is volatile, actually making some trades in the short and long position and coming out the other side of it. Or we can get out and kind of let this happen and see which direction it's really going to take us, whether it be a long-term up or a long-term down, whether we do go into this bear market here in the future. That said, a little bit of advice for the people who have bags out there they're already holding on to. I do have a few bags that I still have in the market that I probably won't really be looking to liquidate ever that often. They're one of those things that I kind of hold through a lot. I am, unfortunately, and I will say, holding a little bit of Cardano, which has been a sad one for me of recent. I'm hoping it'll come out the other side. It's the exact same way that I have made money in the past, is just knowing that probably somewhere the other side of the Bitcoin halving cycle, there's going to be another bull run, which I can get out of the position and actually make a handsome profit. So I really put any of the bags I'm holding into that category. Actually, inside of there is also Bitcoin and Ethereum, which I think will definitely be around come the next bull run. I really don't think there's anything wrong there. Cardano, again, I'm sitting on and holding. I really believe in the project, and I think it will have some legs in there. I'm sure by the next bull run, they'll have worked out a lot of their issues. That said, if you have a lot of other money inside of other smaller bags, you may want to consider actually just also holding them. Again, this is a perfect incentive for why you would invest in projects you believe in, because they'll be around for the long haul. This is actually one of the biggest reasons why you invest in projects you believe in, because if you're just betting on a crypto moonshot without any backing behind it, there's no bottom to that bag. What happens if you've got to be locked in for 2 years? And the company goes bust because it just couldn't make it through the downturn? That's a bad thing. So again, advocacy for doing your research on it, picking those projects that you really believe in and think they're going to be around for the long haul. But I would go back to my advice for holding on to that bag if you can make it through the 4 years, knowing that it always is there. And really, if we went into a bear market at this point, I know we've already had a drop from our all-time high. We probably couldn't see more than like another 50% drop at most. I think the all-time high from the last bull run was an 85% drop over the top. Now that did happen over several years, but it is still a potential for it to happen, or at least get down to that 70-80% range from the all-time high of 67 or 69,000, whatever it was. So that is something you need to be prepared for, but the money is still there if a potential massive problem happened. Broke your leg, family endeavor, need some money real quick. It's still there, but if you can hold out, let it sit out the other side. And for all the other people, I think, who may be in the boat of, I've already pulled some money out because either I came down the other side of that, I took some money out at the top, or I'm sitting on the wayside anyway, and I've already priced in that I knew that it was going to be priced in for all the economic turmoil we've got in right now. You should at very least be making some money on your crypto assets, and you should have it in the crypto sphere. You should have it in the crypto world, ready to get back in if you want to, because if we come out the other side of this economic turmoil going on up in crypto and this bull run isn't truly over, then you want to be able to jump back in really quickly. And that said, I don't necessarily know if we've seen the confirmation we've been looking for on the rest of this year, but I do think it will happen this year as far as a confirmation. Are we going to continue going down into the bear market, or are we going to scream back up through to finish this bull run on a really strong high note? We will see that this year, probably in the next few months realistically, but it will definitely happen in this year. So having your assets available there, maybe not diversifying it too crazy if you still want to make some gains just for another month, might be a good idea. But otherwise, I would say that there would be a time and place to go out and diversify. If you are keeping it in crypto, you may want to be putting it into the stablecoin. As I'm sure you've heard all the other crypto YouTubers say, putting your money into stablecoin protocols and actually making that sweet, sweet passive interest income on those stablecoins, ready to jump back in at a moment's notice. Where else are you gonna put this money, to be honest? Like, you're not gonna wanna send it back to a bank. After you played in crypto, you don't wanna send this back to a bank account where you make 0.01%. That's absolutely ridiculous and actually offensive, to be honest. When it comes to my choices for where I make my interest, I'm really excited about the Anchor protocol on Terra right now. I think it's great. It has a 20% APR that you can get a return on from just staking it. Very easy. You do need to get into their ecosystem, but it's a really great protocol that I've actually done very well on over the past few months. That said, how long will that 20% actually last? We don't really know. It actually has been purported that it was already going to go down, so they managed to throw some more into the yield reserves, and they're maintaining at this level for the time being. Maybe with more people jumping in, it could go faster, but it's definitely been holding off for the next month or two. So you might as well be taking advantage of that. If not that, there's plenty of other stablecoins with interest out there to be made. I would say trying to maintain it in DeFi as much as you can, because I think that we've already seen the use case for it, and the fact that there are governments trying to freeze wallets, Canada, case in point, really should be incentive enough to get out of CeFi. Disclaimer, I still have a few coins in some CeFi, just because a few stable coins, they're just sitting in there because I already had them in there from way before. And it was an okay place. It was just another place to have them. But I will be moving everything I can in this future into DeFi. I have been slowly shifting it all that way anyway. So yeah, I mean, I guess it's really just the same old. You know, if you've already been out of the market because you've taken some gains on there, we're just waiting to see where the volatility takes us. And that's just part of the game when it comes to crypto. I think, again, this is a very uncertain time that we are looking forward to, but we do need to be prepared, whether it's either side or willing to go all the way through the other side. It's exciting, and we love being in crypto because of this volatility. So let's not knock it down, but let's actually be excited and embrace it and really see what happens here in the near future. So I guess that's really it for this video, and my main goal here was really to, even though, bring attention to the fact that there is uncertainty. I think we all know that there's uncertainty in crypto in a very everyday capacity, but that the fact that it isn't dire news completely. I know I started off heavy on it, but really, at the end of the day, we do know that there is a potential for this to come out the other side, and I think we're actually seeing perfect use cases for why Bitcoin will come out the other side. Again, countries and major players being involved and attacking each other is not something we want any part to be in, and we want to be able to exchange and interact with each other on our own terms. And this is exactly what crypto does. More specifically Bitcoin, but it's exactly what crypto does. Now, I hope you found some use in this. If you didn't, maybe it was just educational or purely entertaining. Hopefully it was. If you do, make sure you go ahead and smash the like button, subscribe. It does help the channel. And don't forget to go ahead and leave some comments below on what I hit, what I missed, what you think about the conspiracy theory that I see out there. I'm very interested to see that, because I feel like there's something there. It's just the coincidences are way too much there. But definitely make sure you go down and comment below, because I love reading the comments and talking with the community I have here on this channel. So that's really it. I'm probably gonna wrap it up. Guess what? I'll probably see you in the next video.